Paul, nice to have you with us because we've heard these headlines this morning from China. European futures popping higher, in particular in France, as a result of this. A commitment to further fiscal stimulus in all areas. How much of a game changer is this or not, Paul?
Yeah, good morning, Anna. It's certainly what the market had been hoping for and waiting for in terms of some signs of real policy deliverance here from the Chinese authorities. We remember we had that big run-up a month, 6 weeks ago, and then we started to lose a little bit of steam in China's markets because people were asking, well, is there going to be follow-through? Are we really going to see signs of stimulus? Now what we're hearing, a commitment to a looser monetary policy, fiscal support, efforts to prop up both the stock market and the housing market. That's what the market has been waiting for. All those boxes checked more or less, and then this sets the tone for the Central Economic Work Conference discussions, which will start pretty much straight afterwards, as we understand it. So the market will be wanting to see more follow-through, more delivery, more details, but at the moment we've got the gains in the equities market, and particularly corporate bonds have been getting ready for this. We've seen some parts of that market yields falling for 20 days in a row, people liking it on the rate side, people liking it on the fiscal side as well, so double whammy there.
Paul, how sceptical are investors, though? We've got the talk, do we have the walk?
I think that the market will certainly want to believe it and price in the good news. Certainly there's been a great deal of reticence, but it's gotten to the point where it feels like, something really had to be delivered. We've had quite a lot of incremental measures along the ways, and now more of a package is what the market has been hoping for. It's hard, right? It's hard to know with certainty whether we will get that delivery and whether it will be enough. There's been a lot of disappointment. There's been a lot of false starts already in the market and a lot of investor disinterest as well. So not the entire market engaged. But if it does really catch wind, then it could start to gain a lot more traction and momentum because valuations are so low across the market.
Paul, we had a different Paul on the show earlier talking to us about the fact that this kind of idea of a Trump administration could give China license to ease further. Do you agree with that?
Trump administration could do all sorts of things. Who would want to be a forecaster in financial markets for next year, Kriti? It's going to be very difficult. I think what's really interesting is you're seeing more and more strategists putting out these notes saying, what are the curveballs? What could we get wrong? What could be the surprises next year? So everything's kind of out there. More rate cuts certainly possible. But on the other hand, people even talking about the US might need to tighten again in the second half of the year, depending on the inflation outlook. So it's very uncertain at the moment in terms of where we're going to get, where we're going to see, how it's going to kind of rebound across the rest of the markets as well. So people happy to stick with their game plan for now, but there's going to be lots of uncertainty and wobbles along the way.